for my lateness, my tardiness. A jalapies. Good morning, good morning, good morning. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But I also want to give you a nice hearty thank you for always hanging out with me. My homeboy back here, Spidey, my sweetie over here. Thank you for pulling up the Tim's Tidbits every single day and hanging out with us. If you do not know who I am, my name is Timothy Lee Rogers Sr., right? I ain't nobody special. I'm just a simple dude from Fort Lauderdale, Florida, right? Who get on Al Gore's internet every single day to try to help someone like you get your aha moment when it comes to trading and investing. I go live at 9 a.m. Eastern Standard Time every morning, Monday through Friday. Then again at 6:30 p.m. every evening, Monday through Friday. And I talk about the price action. Why do I do this? Because at some point in time, I didn't really understand what those candles was trying to say to me. I couldn't understand. I always say that in Mandarin, right? But those are actually Japanese candlesticks, and Mandarin is Chinese. I don't know what Japanese is, so I'm going to just keep saying Mandarin. That Mandarin wasn't making a whole lot of sense to me. I thought I knew, but when I got my aha moment one day, I said, this is gold. And you can use it for day trading, swing trading, long-term investing, all things stock market. Because everything dealing with the stock market is played out in this price action. So why not understand how to read it? You cannot be expected to pass a motor vehicle test without reading the manual first on the rules and the laws of the road. You have to understand that. So come with me on my journey to understanding the rules and the laws of the road, of the market streets, so that you can be a profitable trader. That dramatization was brought to you in part by Tim Calls Me Robinson. Here to learn and share. Good morning to you. The birds are chirping. They chirping. Y'all hear the rattling in the trunk? In Florida, when you got that bam in your trunk, the trunk be like, gang, 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 gang. What's up, FC? Marcia. You remind me of a West Side Story. Eat a grape. Hey. What's up, Laverne? What's up, Rhonda? Seawalk, Kareem, Eraser Liquor. Hey, it's kind of drizzly in Columbus, Georgia today, but the weather is, not too cold, not too hot. I done messed my IG up. Ain't nobody on there right now, so that's a good thing. Okay, let's go on and get into it, man. Oh, before I get into it, golly, I don't know what's going on with my phone today. Is acting crazy. No disrespect to the people out there that identify as crazy. All right. Before I get into it, right? What was I about to say? I lost my train of thought. Anyway, let's get into the price action. The overnight price action. Right? As y'all see, that's what I was about to say. I shared something in the Discord today. As y'all already know, I say I will never share anything in the Discord that I do not talk about on what's the name? So in Discord this morning, I got in here a tad bit late. I was dragging today. And as you see, the first post I made was at 3:06, right? I was dragging. Today, this morning's move in London happened right at the open. About 5 minutes after the open, right? I missed my entry because I was in here dragging. I ain't get it while I was in there Talk right there. See, 5:05. That was my first post, right? Congrats. I just sat down at the computer, dog tired, boss. Right? And that was at 3:05. I had just sat down at 3:05, right? So as I was mapping out the chart, if you'll see back here behind us, right there, that, hey, why I can't see the time? Move out of the way. Okay, right here, right there, you see that 3:15 candle right there. You see I was in there mapping out stuff right there. That 3:15 candle right there, that there, I think that transpired just as I was sitting down at the computer. All right. So this is the 310 candle. Okay, so when I sat down the computer, we was on this candle right here. Was making that candle, that red candle right there where I got the line. Because it's a 310 candle. That candle starts at 3:05. I had just sat down at the computer, ain't looked at nothing. Right? Once I went through and did my thing, this right here, this entry right there turned out to be the entry of the morning. Right? So while I sat here, wait, God dog it. Hate when it does this. Freaking Ninja Trader, when you got separate windows like this, you got to open each individual window by itself. Now I got to do it on this screen over here. Y'all hold on, man. I'm just opening tabs. I'm hitting the wrong thing. Oh my goodness. I'm getting frustrated, y'all. Yeah, I'm getting frustrated. I ain't gonna hold you. I am getting frustrated. All right, so I said, hey everyone. Since I got to my computer too late to participate in that sweet bounce off the new week opening gap, I just want to share this divergence I peeped on the daily chart while I'm waiting for another setup. This right here was at 343, right? Let me open this in the browser so you can see it better. This is the picture here. What this is, this is the daily chart. This is the dollar right here on the top. This is the ES right here. This is the NQ right here. This is the YM right here, right? So for anybody who don't understand when I say about the divergence, right? The dollar is inversely correlated to these three indexes right here. I don't know if it's indices or indexes. I don't know. So I'm gonna be safe and stick with indexes. So as the indexes make lower lows, the dollar should be making higher highs, and vice versa. When the dollar making higher highs, like see over here how the dollar making higher highs, and during this same time the indexes are making lower lows, that's proper movement. That's proper movement. But when the indexes are still making lower lows and the dollar is making lower highs, that's not right. Right? That's not right. That's a breaking correlation, right? That's a breaking correlation. So over the last 1, 2, 3, 4 days, right, there's been a breaking correlation. The dollar has been showing weakness over the last 4 days. The dollar has been showing weakness because it's making lower highs as the indexes are continuously making lower lows, right? That's part one to the divergence, right? The slanted down lines. Then you'll notice there's a slanted up line on the bottom one down here, right? There's a slanted up line on the bottom down here, because the reason why it's a slanted up line on the bottom one here, the indexes are correlated, right? So the Dow, let me get off this picture and go to the actual thing so I can show it with my lines. While we're going over here, I'm gonna stop by Spalding House. We're gonna say that real fast. Spalding, where you at, baby? Here I go. Hey, how you doing? Got to see you, Spalding. All right, now let's go over here to the ES. I'm gonna set it up the way I already had it. The dollar, right? Set up the dollar. ES, NQ, YM, right? Okay, so we was looking at the last 4 days right here. All right, so making making lower highs, right? 1, 2, 3, 4. Yes. Still making lower lows. Let's get on the same days. Still making lower lows. Still making lower lows. And right here, you see this day right here? This fourth day, look at the Dow, right? Go back 4 days right there. 1, 2, 3 days making lower lows. What happened on that fourth day? The Dow made a higher low. The Dow made a higher low on that fourth day. See right here between March 1st and March 2nd, right? March 1st and March 2nd, the ES and the NQ made lower lows and the Dow made a higher low, right? That's a breaking correlation on these three right here, right? What does that mean, Tim? Help me. I'm new to this stuff. I'm still not all the way there yet. I'm lazy. All them they ain't the same person. Those are 3 individuals. Tim, I'm new to this stuff. Tim, I'm not there yet. I'm still struggling with the concepts. Hey, Tim, I'm lazy. Got you too, little Timmy Rogers, right? So when markets are correlated or inversely correlated, right? When all is well in the world, when they're like correlated markets, when they're moving in unison, right? The probability of that directional move continuing is higher. When there's a crack in correlation, the probability of that move that was going before the crack in correlation, the probability of that move continuing lowers. So it's a higher probability that this move is going to pause or reverse when there's a crack in correlation with the correlated markets. The same thing with the inversely correlated markets. When the inverse starts moving in the same direction of them, that's a cracking correlation. So whatever move was on the inverse one, right? The continuation of that move lowers. Whatever the move was on the inverse one, the continuation of that move lowers when there's a cracking correlation between inverse relationships. So if the dollar is strong and it starts to have a cracking correlation to the weak index, right? This weak run probability of continuing is lowering. Don't mean it's going to reverse. Don't mean it's going to, not, whatever. But when it's a cracking correlation, the probability of that continued, like, because inverse items move like this. They move apart. When it's a cracking correlation and they start going in the same direction, when they do this, that's a crack. Y'all can't see my hands. I wish y'all could see. Okay, here we go. When it's a crack, I'm gonna come over here, Tim. See, they go like this, but when they start doing this, that's a cracking correlation. Yeah, y'all get it. So that's the divergence that I'm seeing. These are daily candles. So for the daily, on the daily chart, there over the last 4 days, there's been a cracking correlation with the inverse markets. And then yesterday, we got a cracking correlation on the correlated markets. I said inverse. Yeah, but correlated market, inversely correlated, not the inverse market, because there's a such thing as an inverse ETF, but the inversely correlated dollar had a divergence, cracking correlation, whatever, over the last 4 days. And then yesterday, right, the Dow, the black sheep of the family, had a cracking correlation versus the NQ and the ES. And now we're seeing the follow through of that breaking correlation between, started with the dollar, bled over into the Dow yesterday, and now today we're seeing a little continuation. How far can we go? I don't know. That's when you get into the chart and read it. But I just want to share that and break that down. That took a lot longer than I expected. So let's run through the price action really, really quick. And then we're going to get in there. Well, I'm going to hop in there with the black spiders. Now, the second thing I shared in there said, well, everyone, I gave it a little over an hour to present something else, but that institutional order flow entry drill on that 305/3 o'clock BISI looks like this morning move. I'm looking at 4,475 for my New York morning target. I know there's some downside gaps, but I don't smell any blood. It's just my 2 cents, right? Now, coming over here, I don't need you no more, Discord. Bye-bye. So, coming over here, the Dirty Dogs hit my target right here. Why is that on 50? Why is that on 50? I put that on the wrong spot. That should be 75. I typed what it. Let me see. Let me see if I typed the wrong thing or put it on the wrong thing. Did I have it over? That's yesterday. That's yesterday. Been on the 1 minute. Let me go to the 1 minute. Find out what's the name I used. Come here, you. Did I use the lower? Did I use the... Oh, I might have used this one here. I can't remember which one I used. It was in the morning, y'all. It was in the morning, y'all. Let me see which one I used. Not that one. I can't remember which one I used. I used one of them. Right high. That's 4.6. Might have used the 5 minute. Let me see. Didn't use the 1 minute. 4.25. Okay, I got 4.25 there. I typed 4.50. That's 4.25 on the other one. Let me go to the 5 minute. Close enough for government work, whatever it is. Let me unshrink this because I can't see. I want to get it right now. That's at 4.6. That's definitely not the one I use. $4.25. Okay. 4.25 is where it's coming up right there. So, and I had it on 4.50. And what did I type? I mean, I had it on 4.75. What did I type? It was in the morning, y'all. Close enough for government work. I typed 4.75. All right, so 4.75. Okay, that's probably what I did there. See, I say 4.25 here, and then it say 4.675 there. So I think I mixed up two levels, right? I think I mixed up 2 levels because I got 4425 there, and 4425 is yes, that's what I did. So 4425 is the first deviation above this right here, and then 4675 is the next one up. And looks like when I was typing, I might have typed out 404 and then looked back to see what the level was above my line and looked above this line and then typed 75. That's what it looked like I did. But either way, close enough for government work. So what I said all that to say, you see these dirty dogs then came and hit my New York morning target before the morning opened up. So now I got to find something else to shoot for. And the freaking move then came this far. And whenever it runs this far, I don't like chasing the price. It's like, you know what I'm saying? I need for the market to settle down and give me something, because look at this move into London, right? That I feel like that's the whole day's move. So now I got nothing to shoot for. I got nothing to shoot for. We got 5 minutes. Let's talk about what the price did. Okay. What the price did, I was looking at last night before I went to bed. We closed over here and put the day on the screen, the whole day on the screen, up to there, over there. All right, so we closed over here at 39.86.25, right? Melted down a little bit, came down here to the new week opening gap during the Asian and Sydney session, right? Consolidated real nice during the Asian session, right? From like 8 to 10 there, consolidated real nice. Real small, tight range during the Asian, you know what I'm saying? Right after when the Sydney starts up, a little bit broader, but still a nice tight range, right? So I decided I'm going to wake up. Why did I decide I'm going to wake up? Because I was like, okay, we got a nice little consolidated range. We might be looking at a regular London protractionary state. So I got up, struggled up. I ain't go to bed till like 12. So I struggled up, didn't get in here in time to like really focus. But as you see right here, immediately after midnight, right, we started to push up, right? We started to push up immediately after midnight. It was going up, right? Nothing could stop me. I'm all the way up. You know what I'm saying? It wasn't crazy up, but right here at 210, right, we got the Judas swing, aka protractionary state. We got the protraction, we got the Judas swing right here. And then once we got the Judas swing, we did what? We came down, we took out sell side, and we hit a target, right? We hit a target. What is this target that we hit, Tim? That is this week's new week opening gap, right? That's this week's new week opening gap. And what did we say about any PD array when we get above it, right? Once we trade through a PD array, trade through it, when we come back down, can someone put in the chat what we're expecting that PD array to be once we trade above it, right? What do we trade above it? What say, Tim? You primarily focusing on options after 9:30 and before 9:30 futures. I'm focusing on options and futures all day long. I'm focusing on both all day long because like the price action gives me, you know what I'm saying, what I want to do on both of them. The only down, I ain't gonna say the only, but one down draw to options is you can only trade them between 9:30 and 4:15 for the spot. So between 9:30 and 4:15 for the spot, That's the only time you can trade. From 9:30 to 4 for the SPX, that's the only time you can trade. So everything that I'm focusing on is leading actions that I would take with the options. But you know what I'm saying? The futures, you can trade it 23 hours a day if you want to, but I just trade in windows. London, New York morning. London open, New York morning. Those are the only windows I look to actually try to take a trade. Support, very good. Support, very good. I don't mess with futures at all. Just asking. I feel like most are trading futures. Nah, Sanjay. What I'm saying, everything I talk about, you can use it for futures, options, long-term investing, swing trading shares. You can use this for all of that. The market is open. The market is open. The market is open. If you're going to trade, please trade safe. If you're not going to trade, please take copious amounts of notes so that you can go back and study the things that you saw today. Be safe. I'll see y'all at 6:30 p.m. for the price up, the weekly wrap up. I'm sorry. Yeah, you can use it for everything. You can use it support. Thank you, and thank you here to learn the ship. So, hey Sanjay, yeah, you're not alone. I was primarily an options trader. I never used to trade futures. I was primarily an options trader, and I'm still talking about the same exact thing back then. But now I'm revamping, and I'm getting these my sea legs. I'm getting my futures day trade and sea legs back together, and so there you go. So back to what I was saying. Y'all stop distracting me with the chat. I got to go start the live stream with the black spiders. And I just see Nikki put a dissertation over there, and I'm trying not to look at it. I can't do it. I can't do it. Tim, I need to do some back testing, but I've been noticing whenever the indices have janky divergence, it looks like London has been protractionary state. That market profile has showed his head. Okay, now, no, don't worry about the janky divergence. Right? I'm glad you said this. Don't worry about the janky divergence. Now, you can do your own study on the janky divergence, right? But there are key things that you're looking for the normal London protraction and the delayed London protraction. ICT got videos talking about that, and I think it's month 8, and it's called I think daily profiles and when to avoid London trade in London. Those, like the daily profiles, is like, I want to say part 5, like day 5 of month 8, like part 5 of month 8, and then when to avoid trade in London is like part 6 of month 8. But those give you the specific criteria. Nobody told me where that criteria came from yesterday. Those will give you the specific criteria for the regular London protraction and the delayed London protraction. Again, you can run your own study on the janky divergence, but get to understand the actual models that ICT teach of that, and then do your own sidebar with the what's name, right? But and I only say that because you said it looks like the London has the protractionary state. It's key things that make it the normal London protraction and the delayed London protraction. So that's why I said that. But you know what I'm saying? Go ham, my guy. Go ham on back testing the divergence, but just understand it's a specific thing for the protractions. What was I saying before all of that? I can't remember where I was at. We consolidated. We got the support. We expected to be support, right? So it came down, right? When we got the Judas swing, right? We got the Judas swing. It came down and it gave us a this right here. We down here. If we squanch this up just a little bit, this is a you know what I'm saying, a kind of a sloppy dot market maker buy model over here. Once we got down here, we hit this support. You could say this is like a smart money reversal area right here, right? You can say this, but this is a Judas swing. We got the Judas swing coming down. We took out the sell side right here at support, and then we shot up. There was some divergence up in here. It is late, so I ain't got time to run through that, but it was divergence up in here. And that's what made me say this was the move of the day, because we got the divergence after we hit a target, after we hit some support, after we took out some sell side. Then we got the pang out, pulled back into the got an institutional order flow entry drill on this 5-minute BISI right here. This is the BISI that I was talking about in the chart, in the thing there. We got the institutional order flow entry drill there. These are 5-minute candles. This is the 315/310 candle. This is the 315/310 candle. So yeah, so it happened in between 315 and 310, right? And then we was off to the races, and it never looked back. It never looked back. And then I went ahead and gave up the ghost. And then that's when I came out with this projection here that I typed out wrong. I got 525. I got this all wrong here. Y'all know I was sleeping. That supposed to be 25. Right there. I got this all wrong. Y'all know. Uh-oh. What did I do? What did I just do? See, that's why I can't just hit undo. I can't just hit undo on Ninja Trader. Okay. And then we came up to, I don't know if you can see it there. We came up to a prior new week opening gap. We came up to a prior new week opening gap, right? And this ain't the first time we visited. So we went like slap to the top of it, right? We went slap to the top of it, offered a little resistance there, right? Came back on this right here. And I know you're probably wondering, well, Tim, why didn't you take that one right there? Because the move has started down here, right? The move has started down there. So we was in a premium, right? We were in a premium right there, and right at resistance. We was in a premium right at resistance. And so, and we had just taken our buy side, right? At a premium, in a premium. For the people who don't know, right? We've moved all the way up to there and start pulling back. So discount will be way down here at this fair value gap that I already marked out. That's where I would need price to come back down to for me to buy, or at least down to this order block right here. But I'm not an order block trader. So we're in the premium, right? Yes, this is a fair value gap. We're in a premium, but we just hit resistance, right? So price can likely pull back down to this discount. We hit resistance, right? The Dow dumping. We got crazy divergence right now. The Dow is dumping. The NQ is the strength leader right now. And the ES is the red-headed stepchild in the middle. So we got divergence going on right now. So the moves maybe choppity chop. Yes, so that's why I didn't that wasn't an interest to me when I was in here watching the price, because we were in the premium, and we had just came up against potential resistance, right? Popped through the resistance, and now it's support. Now it's support and price, right? We get to this fair value gap that we hadn't filled yet. We had got up past the consequent encroachment yesterday. Toward the end of the day, we got up past the consequent encroachment. Then we kind of settled at the consequent encroachment for a second, and then pushed up and finally filled it. Once we filled it, we used it as support for quite a few 5-minute candles, right? Pushed up again, pulled back down into this fair value gap right there at that consequent encroachment where it was acting as support. Also this order block right there, we got a 2-candle order block right there, pushed back down into it, and then took off and took out my New York target at 850 on the 850/845 candle. And then now we are where we are now. And that is the overnight price action. Try to give as much detail as possible for those that are new to the concepts, don't understand, those that new to the concepts, those that don't fully understand them yet, and those that are just plain lazy. Thank you. Thank you, Lamar. Thank you. That's it, man. That's all I got. I appreciate y'all for hanging out with me. Black Spiders, I'm getting ready to go. I'm getting ready to start up the live now. For everybody else, if you're gonna trade, please trade safe. Yeah. I said that already. I'll see y'all tonight at 6:30 for the weekly wrap up. Gone.